This is the natural gas futures chart. Let's go to the monthly chart just to get a big picture. Now, historically, we are sitting near the bottom of this range, which goes back to 91. So just to give you a macro picture of where we are, natural gas prices are very cheap. So even if we don't get back to the highs that we saw last year, which would be an extreme, $4 is not out of the question by fall time. And that would still only be roughly 25% of the extremes. That's why it's not out of the question. All right, let's go down to the weekly chart. And we can see that price on the weekly chart decisively closed above this resistance level at 265. We did have a false breakout back in February, but I think this close above is real, and we'll get into that in a minute. So let's get into some of the headlines as we begin this week, starting at 6 p.m. Eastern Time tonight. We can see Mexico LNG project will pull significant U.S. gas volumes, industry experts say. Texas natural gas demand surges. They're having a heat wave. Natural gas futures advance to close topsy-turvy trading week. I believe natural gas closed up again another 4 or 5% for the second week in a row. U.S. drillers cut oil and gas rigs for 8th week in a row. So as the natural gas rigs, active natural gas rigs go down, that should put bullish pressure on natural gas prices. Right, it's all about supply and demand. July natural gas futures pressed by robust supply, so we had another build this past Thursday, according to the natural gas inventory EIA report. Natural gas prices shake off bearish EIA report. So even though we had a build, we have exited the shoulder season where typically inventories go up, and we're getting into that part of the season where natural gas prices or natural gas levels should be going down due to demand. Texas grid hurt by natural gas, coal, nuclear power. Okay. Natural gas jump again as demand bets offset storage build. Okay, so let's look at this. Natural gas rallies to new monthly highs amid heat wave, supply fears. All right, so let's see. The bulls in natural gas are making a serious push above mid $2 pricing for the fuel amid prospects for warmer temperatures that could see Americans cranking up their AC. This is the EIA report I was referring to. Higher than expected weekly storage numbers. Natural gas and storage rose by 95 billion cubic feet last week, the highest build estimates by most analysts for last week. So you had a build and prices go up, right? For me, it's all about this natural gas futures seasonality chart, right? This is tracking 20 years of price action on natural gas. And we can see that we can see that in June, prices somewhat retrace before the next leg up, right? So let's go back to the charts and go to the weekly chart. And I bought natural gas or UNG leap option call options that expired in 2025, back in say mid-May, um, and based on Friday's close, I am up 20% on that. We get a little higher, then I'm going to start selling the front month calls to start reducing my initial investment. I think 2 videos ago I put this text in based on seasonality. I was expecting $2.20 to be the June lows. This is when price was around 250-ish. The weekly candle did close above that level, but then we shot back up. All right. All right. So this is that band that I drew out on the monthly chart, kind of showing where prices can go, reasonably go. Let's put, now what's significance about the $3 level? Well, not only is that a round whole psychological number, but that's where we had the most recent highs back in February before prices pulled back. Best levels to have gotten long was down at the $2 level, where the bulls protected this level down here. If price was to get down to the daily bias level at 150, that would have been an extremely, I would have backed up the truck at that point. I think that level goes back all the way to, yeah, June of 2000, right? That was near the pandemic lows, right? So you back up the truck if price would have gotten back down there. But that's not the case, as the bulls have protected that $2 level. All right, this is the daily chart. And we have a floor and a ceiling. You can see a rally in price, hit that resistance, pulled back, and the bulls try to take out that level, which they did. All right, so if I look at current price and look to the left, I don't really see any sellers, again, until we get to this $3 level. These are daily candles, so there might be some sellers on the 8-hour, 4-hour, 2-hour chart, 1-hour chart, but those levels, those sellers can't compete with daily buyers. Out of curiosity, let's go down. Okay, so even so, this is the 4-hour chart, and this is where price closed. You have a red extended range candle, and then you have a gap. So we get above there, and let's mark that in green. All right, so prices, you see these wicks representing sellers, but there's no wicks in this 4-hour candle. So smooth sailing to 383, but then you have this gap, right? There are no 8-hour, 4-hour, 1-hour, 30-minute, 15-minute, 5-minute, 1-minute sellers. This is a gap, right? This is probably contract rollover. So short term, or say this week, let's see if we can get to the 283. So that's only 10 cents higher. I do trade the natural gas futures, so will be interesting to see how we open at 6 p.m. Eastern Time. I was paying attention to the potential civil war in Russia. That would have been a game changer. However, things got halted, according to the news outlets. But had things intensified, we could have seen a huge gap up this evening. All right, so just going back out to the weekly chart again. This week, there's no reason why prices can't go higher. for the week, right? Uh, so 283 becomes the short-term target. $3 becomes the mid-term target. This is my longer-term target at 350. But again, there's no reason why we can't get to $4 by fall time or even sooner. All right. Thanks for watching. Subscribe. Please like the video.